Hi, I'm Kristen King from the Investing Channel, and you're watching Smart Money, the show that gives you the inside edge on the bets that the movers and shakers on Wall Street are placing. This week, we're looking at a sector that is integral to technology and the devices and equipment we use in our everyday lives: rare earth minerals. They have applications in high-tech materials and material science, including the production of batteries, lasers, and powerful magnets, computer chips, and fiber optic communications networks. Rare earths are not necessarily that rare when we consider the Earth as a whole. However, large or concentrated deposits of the minerals are not common, and many are found in places like China and Africa, where politics and conflict can disrupt supply chains. One source of rare earths that's closer to home is the Mountain Pass mine in California's Clark Mountains, which has been in operation since 1952 and was acquired by MP Materials in 2017. Since then, the mine has grown to produce around 15% of the global demand for rare earth minerals. MP Materials Corporation listed in November 2020 through its merger with SPAC Fortress Value Acquisition in a deal worth $1.5 billion. Trackstar IQ, our proprietary search tracking tool, shows that over the past few weeks, 50 institutional fund managers have been researching the stock. During the period between December 2020 and March 2021, MP Materials Corporation stock effectively doubled in price to $51, but in the last month it has fallen by 14.4%. The company reported fourth quarter and full year 2020 earnings on March 18th and posted full year revenue growth of 100% year over to $42.2 million, with production and sales volumes up by some 40% compared to those seen in 2019. And the costs of production fell on the higher turnover too. MP Materials believes that moves towards the electrification and decarbonization of the U.S. economy and its transport infrastructure will increase demand for rare earths and therefore be beneficial for the company's future earnings. Global demand for rare earths is expected to reach $9.6 billion per annum by 2026, with the market expected to have a compound annual rate of plus 12.33% during that period. Prospects for the business look very promising then, so it is somewhat surprising to note that James Latinski, the chairman, CEO, and founder of MP Materials Corporation, has recently sold a significant amount of stock in the business. Before founding MP Materials, Mr. Latinski set up investment manager JHL Capital, and on March 26th, Mr. Latinski sold just over 4.6 million shares in MP Materials, whilst JHL Capital sold a little over 3.3 million shares too. Those sales raised the best part of $268 million and were part of a pre-announced secondary offering of stock in the company by major shareholders. It's not uncommon for large shareholders or founders to sell down some of their holdings in a recently listed company. After all, they may wish to cash in on some of their investments. What is perhaps surprising is that Mr. Latinski has sold all but 2,338 shares of his personal holding in the company. True, JHL Capital retains 11,198,940 shares in the business, and so Mr. Latinski will retain exposure to MP Materials Corporation through that. Nonetheless, it's a surprising development. MP Materials stock has risen since the sales were made at $33.77 and $33.78 per share. The company also announced it is raising $600 million in 5-year debt, which will be convertible into MP Materials shares at $44.28. Such convertible offerings can often depress the price of the ordinary stock, though that doesn't appear to have happened in this case. It could well be that the insider selling and the convertible bond offering are part of the natural evolution of this business as it moves to the next stage of its development and the seemingly inevitable growth of its underlying market. The price will tell us what the market thinks the prospects for the business are after these recent events, and as such, we should watch the shares closely from here indeed. That's all we have time for this week, but as usual, make sure you do your due diligence before making any investment decisions. To find out more about our Trackstar IQ data, sign up to our free newsletter at investingchannel.com/Trackstar.